This is for the passive income lovers, the dividend ETFs. These are funds that focus on dividend-paying companies and distribute the cash straight to you. With that cash, you can decide what to do, spend it or reinvest it in the portfolio to further turbocharge your growth. I will divide this strategy in two: dividend growth and high current income. The difference is that with dividend growth, you are mainly interested in companies that give you smaller dividends now, but have the potential to grow both them and the share price in the future. And for the high current income, you are more interested in getting more money now in your bank account, but you sacrifice future growth. Luckily for us, for both strategies, we have a filter that this time actually works. We go to the equity strategy and click on dividends. Then we also scroll down and click on the distributing part in order to be able to receive the dividends from the ETFs. We will also put a minimum 100 million euro as a size of the ETF to filter out new and unproven ones. Now we are left with only a few dozen of results, which we can go through a lot easier. Now, for the dividend growth strategy, since we don't have such filter in just ETF, I would order them again based on the 5-year performance rate. Why? Because companies that have good record of dividend growth usually produce better total returns than simply stocks with high dividends, and that should help you have the quality dividend growth ETFs at the top. Once you have that, you can start opening them one by one and researching them. Now, since this video will be pretty long as it is, I will not get into how exactly to do it, but basically you want to research how much have their dividends grown in the past to get an idea of whether the ETF is living up to the expectation of a dividend growth ETF or not. When you do that, make sure you're actually using the fund's base currency in which it will be paying its dividend in order to not get confused by the conversion between the currencies. By the way, one of my favorite ETFs for European investors is in that category, and I also currently have it included in my top 4 stocks and ETFs report for the current economic and geopolitical environment we are in. You can get the report for free by going to the link in the description. Let's move to the high dividend approach. Here, you're maximizing the current income you're receiving and are not that interested in the future growth. For that, we go back to our results with the dividend strategy and we sort according to current dividend yield. Once we have that, we can start going through the ETFs one by one and see which fits our criteria. I need to give a little bit of warning here. This strategy is a bit tricky because of a concept in investing called yield trap. Yield trap is a company which has had its share price go down significantly, and because the dividend is measured as a percentage against the share price, when that happens, the percentage of the dividend rises. So sometimes you might have companies or funds performing very poorly, and because of that, the current dividend income you receive will be high. However, those dividends are usually not sustainable and might get reduced in the future. There isn't a simple metric I can give you on how to know for sure, which is why I have the topic covered inside my investing program called the dividend method. But in a sentence, first you need to evaluate the rules the ETF follows and if they protect you against such companies, and then combine that with a little bit of understanding of the top companies in the fund. This is just a part of my video on how to build an ETF portfolio as a European. To check the full version, click on the video that should have appeared on your screen.